What if I told you that three currencies, the Iraqi Dinar, the Vietnamese Dong, and Zimbabwean Dollar, could hold the potential to reshape your financial outlook in 2025? That's right, global attention is on these currencies. Yet while headlines are abundant, very few people truly grasp the deeper realities of possible reevaluations. Many assume that once values shift, they'll simply walk into a local bank and swap their notes for US dollars. That assumption is risky and could cost investors everything if they're not prepared. Today, we'll explore lessons from history, why governments protect domestic interests first, and why travel may be your only safeguard. By the end of this video, you'll understand exactly what to expect and how to plan ahead. Currency resets are rarely quick or effortless. Popular culture often paints the picture of a sudden announcement followed by smooth and instant exchanges at every bank counter. In reality, history shows the opposite. Take Zimbabwe's experience, for example. When that nation went through multiple redenominations, it was never as easy as trading paper at the teller window. The process involved strict deadlines, carefully selected locations, and enormous logistical issues. Those living far from cities or unaware of the rules often lost their life savings. Governments focused on stabilizing their economies and serving their citizens first. Holders abroad had to make urgent travel choices, sometimes at great expense, to protect their value. This example offers a clear warning for anyone holding Iraqi Dinar, Vietnamese Dong, or Zimbabwean dollars. Iraq, for instance, has worked for years to strengthen its financial system. Yet the dinar remains suppressed due to politics and regional uncertainty. When revaluation finally comes, the earliest opportunities will almost certainly be limited to banks inside Iraq or within trusted nearby partners. American or European banks are unlikely to participate right away. Assuming they will is a costly mistake. Past events show that foreigners who hesitated or waited for local access often suffered big losses. The lesson is simple. Preparation matters far more than hope or speculation. Dong holders face a similar reality. Vietnam's economy is expanding, but the currency still reflects outdated conditions. Should Vietnam adjust its rates, priority will go to domestic citizens and regional partners. This means exchanges abroad may take much longer to materialize. For global holders, that delay could mean missed opportunities or poor conversion terms. We only need to look at examples like Brazil or Kuwait to see that governments consistently favor their own banking networks in the first stages. Acting early, understanding regional banking connections, and being prepared to move are what separate those who profit from those who don't. Zimbabwe provides one of the clearest roadmaps of how challenging transitions can be. When the government replaced its hyperinflated notes, exchanges were only conducted in specific places during limited time windows. Citizens often had to travel long distances, wait in endless lines, and absorb costs that sometimes exceeded the currency's value. Those unprepared lost out completely. This teaches us that IQD, VND, and ZIM holders worldwide must anticipate similar restrictions. If reevaluations occur, travel to Iraq or its neighbors, Vietnam's regional hubs, or Zimbabwe itself may become necessary. Assuming your home bank will participate from day one is simply not realistic. Consider Iraq again. Countries like Jordan, Kuwait, the UAE, and Turkey maintain close banking ties with Baghdad and could become early exchange centers. US or European institutions may lag behind. Timing will be everything, and only those who anticipate this reality will benefit. In Kuwait's case, after the Gulf War, travelers who exchanged currency at authorized banks saw life-changing returns, while those who assumed convenience lost out. For Vietnam, nearby countries like Thailand, Singapore, and Malaysia are strong candidates for early participation. History shows that regional ties matter most in the initial stages of currency reform. Zimbabwe's case will be even more restrictive. If a new system emerges, the most likely exchange points will be within Zimbabwe itself, or possibly South Africa. The government has repeatedly limited access to foreigners in order to protect local stability. Holders abroad who want to benefit must be ready to fly in, sometimes with very little notice. In past cases, waiting too long or relying on unofficial channels led to devastating losses. This underscores the importance of proactive planning, knowing where to go, how to get there, and what documents are needed well before announcements are made. History reminds us that reevaluations are often phased and region-specific. When East and West Germany reunited, East German marks had to be exchanged within strict windows. Many foreigners had no choice but to travel to Germany itself, where crowds, costs, and deadlines made the process stressful. IQD, VND, and ZIM holders should expect the same. Governments will not design these events for global convenience. Awareness of time limits, official banks, and travel logistics will be vital. Those who plan ahead will secure their value. Those who wait could miss out entirely. Practical preparation must include studying banking networks. For dinar holders, research which foreign banks work directly with Iraq. For Dong holders, look into regional Southeast Asian banks with existing ties to Vietnam. For ZIM, learn which African banks might act as exchange hubs. These details are often overlooked but make all the difference between accessing official rates or paying steep costs to intermediaries. Knowledge, not guesswork, is your greatest asset in navigating such transitions. Documentation is another critical piece. Your passport should have at least 2 years of validity, since many countries require extended dates for entry. Some destinations also require visas, which can take weeks to process. Waiting until a revaluation announcement could leave you scrambling, unable to travel in time. Advanced preparation ensures you can move quickly when windows open. Historical data consistently shows that individuals who prepared their travel documents early were the ones who succeeded when opportunities finally arrived. Budgeting for travel is equally important. Currency exchanges rarely happen in a single day. Expect long waits, multiple visits, and even overnight stays near exchange centers. Flights, hotels, transport, meals, and sometimes security measures all add up. In Kuwait, Brazil, and Germany, those who plan their budgets carefully managed to navigate the system smoothly. Those who underestimated costs often watched potential profits evaporate. Planning now eliminates that risk and gives you an advantage. Building a support network also matters. Connect with fellow holders, both locally and internationally. Traveling in groups lowers expenses, increases safety, and ensures you have access to shared knowledge about exchange sites. Communities of informed holders historically fared far better than individuals acting alone. Networking now could provide critical support when the time comes, guiding you toward the right locations and helping you avoid costly errors. Another vital step is monitoring official communications. Do not rely on rumors, forums, or unverified claims. Central bank announcements and government press releases are the only sources you can trust. History shows that misinformation spreads quickly during transitions, leading many to miss opportunities or make bad decisions. By cross-checking every update with official channels, you protect yourself from speculation and ensure that your actions are grounded in facts. It's important to remember that Iraq, Vietnam, and Zimbabwe own no obligation to foreign holders. Their reevaluations will always prioritize their own citizens first. Access for outsiders will depend entirely on local strategies, not international demand. Expect the first exchanges to take place within each country or through select regional partners. This has been the consistent pattern worldwide, from Brazil's currency transitions to Kuwait's post-war reset. Assuming otherwise is dangerous and unrealistic. Finally, do not wait until the last moment. Preparation well in advance is the single best way to secure your gains. Once announcements hit, flights and hotels skyrocket, exchange centers become overcrowded, and last-minute travel turns chaotic. Past examples from Zimbabwe to Germany prove this repeatedly. Those who planned ahead got the best rates and avoided stress, while others missed out. The takeaway is simple. Act now, prepare thoroughly, and be ready. Your financial future depends on the steps you take today. Iraqi Dinar, Vietnamese Dong, and Zimbabwean Dollar may all present historic opportunities, but only for those who prepare. Secure your documents, plan your travel, budget your expenses, and monitor official sources. Don't rely on convenience or chance. History is clear. Preparation separates winners from losers. If you found this valuable, like, share, and comment below with the steps you're taking. Subscribe and hit the bell to stay updated on global currency changes and contract rates. Your preparation today will determine your success tomorrow.